Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today I'm going to walk you through one of my big long-term conviction plays here for 2021. This is what I'm calling a stock stack that combines both DraftKings and the Spac BFT together. As you guys know, I've been in DraftKings stock since maybe mid to late summer of 2020. Still going strong here into 2021. It is a long-term play for me, thinking about the next probably 4 or 5 years, to be honest. That's how long it's going to take DraftKings to even get close to the cap on their potential market. But as an added stack to my DraftKings stock, I'm also adding BFT, which will eventually become PaySafe, which is the payment platform that DraftKings uses. And PaySafe doesn't just serve DraftKings. It's not a one-trick pony. They have a massive, massive payment platform. We'll get into the details here in a minute. But that's what this video is. We're going to talk about DraftKings. We're going to talk about stacking your DraftKings investment with PaySafe, currently trading under BFT ticker. Quick reminder that my stock picks and projections are just my opinion for your entertainment. Please make sure you do your own research before investing in any stock. And if you like stock market analysis like this and other personal finance videos, please give the video a like, subscribe to the channel, all the things. Thank you very much for your support. All right, just in time for this video, DraftKings had their investor day yesterday, so we got some new information about the stock. For purposes of this video, we're going to be talking long term. So I'm going to focus on the seeds that they're planting for the long term and some of the stats that stood out. Right now, when they did their market surveys in Q4 of 2020, they are the market leader in online sportsbook and igaming. iGaming is basically mobile casino games, right? So whether it's blackjack or roulette, and nowadays they have a lot of gamification with those iGaming platforms. And iGaming, while it doesn't get as much credit for DraftKings, that is actually planning to be a big portion of their revenue going forward. So outside of the online sportsbook, always keep your eye on iGaming too, especially when states become legal. You want to make sure that when a state becomes legal, if you're a DraftKings stockholder, the next question is, did they legalize OSB in iGaming? If they did, then that's a huge state win for DraftKings. And here's some more branding statistics that they provided. This compares against DFS operators 2, 3, 4, 5, sportsbook operators 2, 3, 4, 5, and iGaming. You can see right at the top, at least from these surveys, that DraftKings is doing a great job in being top of mind when people go to look for apps that they're going to participate in these gambling plays. As you've probably seen on TV, DraftKings spends a ton of money on marketing and has numerous partnerships across almost every conceivable sports league, and this is a key to their strategy. So if you are not big on marketing spending to produce long-term sales, then you are probably not going to like DraftKings financial metrics very much, and that's okay. Just to give a quick example of their methodology on the big marketing spend that they've put up on the front end, this chart over here takes their individual states and kind of gives you the outlook for the future, right? So the dotted line is promo rate, aka marketing spend, and you see how it starts high and goes down, whereas the existing customer base continues to grow. So they've taken every state, they're looking at it at a 5-year cycle, and we'll get into the profiteering on the 5 years here in a second, but they're not just throwing money around, they are trying to come in, build up this foundational existing base of folks. So by year 5, there's really not that many people left who are either unaware of DraftKings and or do not have an account yet. And this is finally a summary of the importance of getting people into year 1, 2, and 3 cohorts. As you can see, these launch years, this is based on New Jersey, by the way, which was the first market to have both tiers, both online sports books and the iGaming component. So that launched in 2018. The green indicates the launch year cohorts. The orange is second year. The blue is third year. And the yellow is the fourth year. And long story short, if you follow this line, contribution profit, you're basically operating at a combined loss in that first launch period of 3 months or so. Then into year one, you get up to a little less loss. Year two, which is actually where New Jersey is, had a contribution profit. And into year three, you can see how that explodes, right? You go from an 8 million contribution profit this past year in 2020, the estimation for year three, you get the contribution profit up to 65 million. So while this is a high-level overview, this is the math on how these markets work. Each state that opens up, you can just assume it's good news, but you also have to look ahead to year 4 and 5. And all of this just goes to show you why DraftKings is a long-term stock. All right, taking a quick peek at DraftKings stock today, $63. And this is a one-year chart, and we've had a lot of market weakness over the past couple weeks or so. And it's interesting because DraftKings had some good news coming out. Their EBITDA projections over the long term are coming in higher than expected as they have more data on the state's opening. You could have picked it up on March 1st, which was a weekday in the market for about 59. But overall, a really strong sign when we saw how much market weakness there was, and yet DraftKings shareholders stood strong. You probably also had the added benefit of ARK Investments has been adding to their DraftKings stake. You know, you get a lot of ARK followers that basically will buy anything that they buy. So that's, if anything else, that's good PR for DraftKings stock. All right, looking at the technicals chart, you can see that if we get some more market weakness, there's probably a range here between 45 and 56 on the moving averages. Maybe you could settle in about 50 if you want to set yourself up for a potential low buy-in. I could see 50 or maybe slightly under happening in the combination of market weakness. You know, we still have March Madness and whatnot coming on, and you still have a strong RSI up to 55 today. But don't be surprised if you see a dip to 50 or below once the NCAA tournament is over. I could be wrong on that, but if you're looking for a bottom, that's about where I'd put it. All right, taking a peek at the TipRanks dashboard to see what the best performing analysts think about DraftKings. And we had our investor day yesterday. We had an earnings report come out 8 days ago. Right now, you've got most analysts in that $70 range. If we just take this top cohort of 6 or 7 names, 66, 84, a couple 70s. So not a huge run up left over the next 12 months, and I would sort of agree with that. But even beyond that, you still have, you know, double-digit growth projections if you land in the 70 range over the next year. All right, so that was a quick overview of DraftKings stock and where it stands today. I'm in at about 200 shares with my cost basis just under $35. Knowing that this is going to be a 3 to 5 year play for me, if I did see prices dip under 50, I would likely add more, even though it'll raise my cost basis some. But even if I never see the under 50 with DraftKings to add more, there's another way to play this stock that I'm doing in tandem, and that's with the Spac BFT, which is going to soon turn into PaySafe. Okay, so here today on March 9th, if you become interested in this idea, you're looking for ticker BFT, Foley Trasimene Acquisition Corp. It's led by a long-term investor, Bill Foley, and you can see the price today is under $15. This is a 1 year chart. It is still in sort of the Spac area of the ticker. It has not transitioned yet. And it went on the market for just under $10 or so back in October. It's had some bumps here and there, but it's also come down. And in the recent market weakness, it's fluttered about in that, $12 to $13 range. So you can still get in this one for less than $5 over the kind of IPO price, if you will. All right, and before I show you PaySafe's sort of ecosystem, if you will, there's two reasons to think about this stock. The first is the DraftKings stack, which is essentially what I'm presenting here. But there's a lot of people, including this article by Larry Raymer. There's a good chance that after the merger is complete, PaySafe will become a takeover target. So if you think about companies like Square, PayPal, etc., their growth is going to be somewhat limited because there is all these disparate payment processors out there, most of whom are much smaller than PayPal and even Square. So the easiest thing for the bigger companies to do, instead of trying to grow their business, and PayPal's done a great job of that, is to just pick off one of these smaller players. And when I say smaller, PaySafe is not tiny by any stretch of the imagination, and they would be very intriguing to a lot of companies to pull their product base into the mothership, so to speak. All right, so there's two reasons to stack PaySafe investment with your DraftKings, vice versa, however you want to look at it. And the fact of the matter is PaySafe is the global leader in igaming sportsbook payment platforms. And this is on an international basis, with the obvious opportunity that the United States is going to be growing this market substantially over the next few years. You can see some of their bullet points. They serve over 1,000 operators globally. They've been in Europe since '99. They've been in Canada since 2010. They have 100% of Canadian iLottery coverage. They're already plugged into the largest global operators, including DraftKings, but if you recognize some of these names, Golden Nugget, PokerStars, Bet365, and Betfair, these are big companies that are going to be winning as the U.S. expands, and their winning leads to PaySafe winning because at the end of the day, they get a percentage of the payments that are processed on their websites. Now, if you've never used a PaySafe product to pay or send money, these are their big brands. You have the PaySafe main brand, you have Skrill, which is a digital wallet, and NetTeller, which is a digital wallet. And before the days of sort of Cash App and Venmo, Skrill and NetTeller were one of the most secure ways to send money, and they still are when it comes sending money to people you don't know, right? So you want to send them payment for whatever, or you want to log into a digital wallet, but you don't necessarily want somebody to have your first and last name and know where you live and all that stuff. That's where Skrill and NetTeller still have a use case in the kind of Venmo Cash App world. All right, to me, this is where the BFT DraftKings partnership just makes a lot of sense from an investing standpoint. And heck, even if you don't care too much about DraftKings, who PaySafe has as clients and where they're getting percentages of transaction revenue is pretty impressive. We talked about iGaming. They also have some travel and entertainment plays, but one often overlooked play is this digital goods segment where you have Google, PlayStation, Roblox, Twitch, EA Sports, Fortnite, Spotify. They are the payment processor for these platforms. That's a pretty nice resume, and as we know, the world is kind of like leading towards a lot of these companies on how money is going to be spent online. I love where PaySafe sits with their existing client base. Now, the cool thing about PaySafe and this Analyst day that they just had is they've just released their numbers from 2020, even though it won't be represented in the BFT stock quite yet. The estimated revenue was $1.3 million. They ended up hitting $1.4 billion. The adjusted EBITDA basically flat, but they hit that number, so it wasn't just, a blind promise of $420 million. And the margin came in right on tune at 30%. Here you see their growth rates. Digital wallets could grow as high as $23 billion. eCash, which is that NetTeller category, could go as high as $6 billion, but then it's processing, obviously, where you're going to get the lion's share of the growth from $67 billion, could get as high as $85 billion if things go right. All in all, you're seeing transaction volume go from $92 billion in 2020 to somewhere in the neighborhood of 100 to 110 in 2021. And then the long-term outlook is a 14% CAGR from 21 to 23, going from, 100 billion if they hit their mark this year up to 135 in 2023. All right, so you see why it makes sense if you're a DraftKings investor to jump into BFT as well. Particularly at this price, which is a little less than $5 over the initial Spac offering. Now, the hard part, of course, is it's a very, very difficult to evaluate BFT, right? We know what we're walking into with DraftKings. We know that the price in the 60s is likely a little bit higher than you'll pay for value stocks for sure. And you're going to have to stay in the game for a little while. Now, on the BFT side, it's even more complex because you get into, what will be the final posted audited numbers before they go live. How will the share system work? All those things. But considering it is an experienced staff that is bringing this one public, I think that they understand the importance of delivering value to the shareholders. So I feel pretty good about getting in on this one. Right now, I stand at 200 shares at just about $14 a piece. And when the actual PaySafe goes live, which is supposed to be before the end of March, I'll try to keep you updated on this channel. I did see a speculation date of March 25, but I could not find a communication confirmation from either company, whether it was Foley or PaySafe themselves. So hang tight on that March 25 date. But once things go live, we're going to have a little bit more numbers to look at. But if you don't mind blindly buying for today, I think it stacks up really well with a DraftKings investment. And hey, if you play DFS or gambling or anything like it, you know that stack plays, they tend to pay out the most if you nail them. And that's what I think is really kind of cool about this particular opportunity, because you can get your piece of DraftKings and you can get your piece of PaySafe. PaySafe arguably is trading at a cheaper valuation today, though it's very hard to tell in this current state. But you bring the two together and you might be able to manage their cost basis over the next 3 years at different times, right? PaySafe could be down slightly on days that DraftKings is up, et cetera, and by bouncing off of each other, you can turn this into a pretty solid 5-year play, in my opinion. All right, guys, so that's my DraftKings stock stack with BFT PaySafe. Let me know what you think in the comments. Are you going to get in this trade? What do you see for the future? Thanks for watching. We'll see you on the next video.